aluminium and copper prices as higher cost and disruptions at Novelis weighed on its performance. My colleague Sajid Kaura with the MD Satish Pai to understand the way forward for the company.
Yeah, first, what I would like to highlight is a very, very strong and resilient performance from our Indian operations, both over aluminium and copper. So we had an all-time high PAT of 3,580 crores for the quarter. The consol and the EBITDA for aluminium was very good. Our aluminium EBITDA margins are running at 45.5%. So I think that overall, when you look at our India operations, both upstream, downstream, and copper, an extremely strong quarter. And I think that this is a series of quarters that we have announced very strong Indian results. And we think that that trend is going to continue.
If you can take us through individually through the aluminium cycle and copper cycle as well. We've seen good realizations coming in from aluminium. Copper was slightly weak because of higher TCRC prices. But how do you see the aluminium cycle?
So firstly, let's talk about the market and the market demand for aluminium. So we have seen that in all sectors, whether it's transportation, buoyed by the GST2 reforms, auto sales have been very strong, packaging, the electrification sector, white goods, food, cookware. So in all these sectors, we have seen very strong demand for aluminium. And I think that that's why if you see even our downstream had a record quarter, 55% up year on year, which shows the strength of the aluminium demand in the country. As you said about copper, TCRCs are low, but the byproduct realization, whether it is from sulfuric acid or other metals that are in the value chain, we delivered close to the 600 crores per quarter that we have been guiding to. Also, just to talk about the copper market, that also demand year on year was at about 10% up. So again, driven by electrification, wires and cables, transformers, the demand for copper has been very strong.
Sir, commodity prices have been volatile in Q3. How do you see the pricing going into Q4 and next year?
So we are halfway through Q4 and the prices have been extremely resilient. So I think what you're seeing is a combination of supply demand being tight along with various investor sentiment, which has driven commodity prices. It's not just aluminium and copper. Most commodity prices are at all-time highs. So I think you're seeing a lot of investor sentiment and investor interest in the metal space right now. And that fact that the fundamentals, which is supply demand, is quite tight. So which is what is keeping the commodity prices very firm.
You've been, you spoke about the fact that the kind of demand which we are seeing from some of the key sectors, auto and others. How do you see the demand picking up for auto from here, and and are you seeing new emerging sectors also coming in with demand in the domestic market?
I think that's a very good question, because what we are seeing now is this whole emerging space on electronics manufacturing and defense. These are two sectors that the government is prioritizing, and we are starting to see a lot of foreign companies coming into this space, whether it's in the mobile phone space, and we are seeing lots of talks about defense manufacturing starting in the country. So both these things are very good for our aluminium and copper business.
But at Hindalco, are you into specialized aluminium and metals there, or you will need to have put in some capacities to cater to this future demand which is coming in?
So we have just commissioned our state-of-the-art rolling mill in Sambalpur, which makes aluminium foil as well as aluminium coil. That will serve both the EV electric battery market as well as the defense sector. So we also have a state-of-the-art extrusion plant that we have commissioned in Silvassa, which take care of automotive as well as aerospace. So as you know, that Hindalco has gone further downstream into engineering goods. And I think that our strategy to move towards more value-added aluminium and copper actually is allowing us to take care of these market opportunities that are emerging.
Sir, I want to take one more question on the domestic market before I move on to Novelis there. how do you see the capacity expansion plan for domestic market there? You said you have operationalized a couple of units, but what is the total capex plan that you have over the next 2 years for the domestic market?
So we have announced, as you know, a pretty aggressive 50,000 crore capex plan over the next 3 years. So over the next 2 years, we are going to be commissioning an alumina refinery in Odisha. We are going to be commissioning a copper recycling plant in Gujarat. We are doing an aluminium smelter expansion in Odisha and a copper smelter in Gujarat. So overall, we are going to take our aluminium capacity close to 1.7 million tons from the current 1.3, and the copper is going to go from 400 KT to 750 KT. So quite a big investment in growing the upstream capacities. On the downstream side, we are now at 600,000 tons in aluminium with the commissioning of the rolling mill in Odisha and the extrusion plant in Silvassa. So big capex plans to grow the capacities both upstream and downstream in India.
Sir, coming to Novelis, what is the update there? We saw the update yesterday. Volumes have fallen by 11%. When do you expect, volumes to normalize and the new, the Oswego plant to come back into operations?
So the first thing I wanted to say is that Novelis's quarter, if you strip out the fire, was an extremely good quarter for us. If you look at the EBITDA per ton on an adjusted basis, was close to $500 a ton. So the underlying business of Novelis is doing very well. The scrap spreads are very beneficial. Our cost-cutting plan is ahead of target. So all what we need to do is to get the Oswego mill back online, which we are planning to do somewhere in the middle of Q1. So once that comes up, then those volumes will also come back. By the way, I think that Q4 will be a much stronger quarter for Novelis compared to Q3.
What is the kind of impact that you have seen because of the tariffs? Because, of course, if you exclude the one-offs because of the fire, the tariffs is something which has also hit Novelis. How do you see that getting mitigated?
So we have been mitigating it by increasing our rolling capacity in the US. So if you look at it in Q2, we had roughly a 60 million tariff impact. In Q3, we declared a 33 million tariff impact. And by the time we get to Q4, that tariff impact will come down to some negligible number. So as we increase our capacity, and especially because we needed Oswego to come up, we would have largely mitigated the tariff impact by having US capacity.
Sir, the capex plan of Novelis is something which is, unnerving the market here because the capex plan has been increased as well. And that has also helped, led to an increase in your gross consolidated debt levels as well. Where are we on the capex plan on Novelis, and how do you, look at the kind of returns that will come in at the end of the capex plan for Novelis?
So, as we said in the last quarter, the Bay Minette plant is the single biggest, largest capex plan of Novelis. And it's true that in February, we upped the budget from 4.1 billion to around 5. But now that project is on track, the cold mill is commissioning in March, the hot mill will commission in October. And we have also been on record saying that the IRR of that project will be a very high single digit, which will be recovering the cost of capital of Novelis. But I think what we have to say is that once Bay Minette gets commissioned, we'll be the only aluminium producer in the US to have 3 hot mills in the US. So I think we are going to be able to take good use of these 3 hot mills to serve the market in the United States.
And does having more operations in the US help you in some way with respect to tax incentives or any incentives from the US government?
I think with the current administration policies, anybody who has capacity in the US is going to benefit.
With respect to the increase in plants or operations in the US, does it help you in any way with more incentives from the US government?
Yes. So what I had said is that under the current administration policies, anybody who has US capacity will benefit. So we are strongly going to take advantage of the huge US market with the new Bay Minette capacity that we are setting up.
My final question to you, sir, is on the consolidated debt, which has reached roughly over 59,000 odd crores, which is there, and that's also a point of nervousness for the market because if you look at quarter on quarter, it's a jump of nearly 44% of the debt from 34,000 crores to 59 odd thousand crores. How do you plan to deleverage that debt?
So first, I wanted to tell you that the consolidated net debt to EBITDA is 1.73. So well below our target of 2. So it's an extremely strong balance sheet. Second is this quarter, we pumped in about $1 billion of equity into Novelis, which is about 8,000 crores. Now, the remaining increase is largely working capital, which we required for our copper business and because the aluminium prices went up. Now, most of that will start to reverse in this current quarter by the end of March. So I don't think that the market needs to worry about our balance sheet and our debt because it's extremely strong and we are committed to keeping the consolidated net debt to EBITDA below 2.